Boy, that time flies when you're having fun. Welcome back, guys and gals. JJ here, schooloftrade.com. It is great to be back with you guys. Happy Monday to you all. It's Monday evening. It's January the 14th, 2019. Welcome back to your nightly newsletter. You know, I help new traders just like you earn consistent profits using a simple three-step trading strategy that we execute together every day in our trade room. And tonight, we're going to cover crude oil, S&P, Nasdaq, gold, and of course, we can't forget about that mighty euro. And my plan tonight is to find the best opportunities setting up for tomorrow's trading session. Digging in here tonight, we get oil, right? And of course, oil has this big combination of this big bear channel along with a real tiny trading range. My goal is to use the range in combination with that channel to find both buying and selling opportunities tomorrow morning. Over on the S&P here tonight, S&P is very similar. S&P has three main components we're watching here tonight. Got a gap to fill, we got a hidden channel, and of course we got that little tiny trading range, right? That's one common denominator among all of these markets. We're going to take a look at that because I'd like to use the low of this channel to kind of fill that gap, right, for tomorrow. We're going to grab a look at that in just a moment. Over in the Nasdaq is very similar here. Gap down, short-term trading range, nice little hidden channel. I'm going to see if I can use this trend line here in the Nasdaq and see if I can grab this thing up off of that low, and maybe we get lucky and hold a runner up to that gap. I got a plan for you guys in the Nasdaq here, so stay tuned for more on that in a moment. Over on the gold continues to be a beautiful range-bound market. I know. We're supposed to be scared of ranges, but these ranges are really nice to be trading right now. Got a couple things in the gold tonight. We got a triangle on here. We got a range on here, but I think the big clue here for tomorrow is going to be that pendulum swing. That pendulum swing tells me to expect a nice deep dip here, and that's going to give me a chance to buy off of that low. We're going to dig into this GC in just a few moments. And of course, don't forget that euro, right? Euro here, really ugly chart tonight. It's a chart only a mother could love, as I always joke around with you guys, right? We got a couple components here, right? Measured move on here, trading range, and again, a beautiful, right, channel on here. So tonight, we're going to put together a plan, try to combine these hidden channels along with these trading ranges. Yeah, it's kind of ugly price action out there right now, but that's all right. We got a good plan here for it, and we'll put the plan together here in just a few moments. Before we jump into our charts, though, I got to remind you right now, make sure you never miss another newsletter video. Go over to our blog here at sidewaysmarkets.com. I'll put all the links in the description of that video tonight. Give me your name and your email address. Again, the link will be right below the video tonight in the description, right? Give me your name and your email address, hit that subscribe button, and that way you never miss another great newsletter video. Also, too, don't forget, tomorrow morning, we open up our trade room at 8 o'clock Eastern time. If you can't be there with me tomorrow morning, the next best thing is right below the video tonight in the description of the YouTube channel or below the video tonight on our blog. You'll have the ability to download all the charts from tonight's video. It doesn't get much better than that. If you can't be in the trade room tomorrow morning with me, we open up at 8 o'clock. The next best thing is grab those charts and have them ready for tomorrow morning's trading session. And then don't forget, if you have any questions, drop me a comment in the comment section below the video if you have any questions there, or you can always call us toll free, right? We got a toll free phone number. I got a live support button up there in the upper right hand corner of this web page. Feel free to grab that live support or just pick up the phone and call me, right? I'll be here. I'll be bailing out my boat out back here right now. It is raining cats and dogs out there. Looks like the world's coming to an end, but I promise I'll be here. My phone still work, right? It might be raining might be raining big time out back there, but it is definitely, the phone still works. So give me a call there and I'll make sure to answer all of your questions. All right, you guys are busy people, so am I. It is great to be able to be here with you guys one more time here tonight. Got a lot to work to do though. Let's roll those sleeves up and let's get ready for tomorrow. Tomorrow is the 15th, Tuesday, January the 15th, and let's see what our schedule looks like for tomorrow. We got really only two big news events tomorrow. The CPI number at 2:45 Eastern time, and of course that PPI number tomorrow at 8:30. Both of these are based on inflation. So if you're in Europe or if you're with me here tomorrow in the US session, both of those are dealing with inflation, right? Consumer prices at 245 and producer prices. Anytime I'm thinking inflation, I'm thinking thinking gold, I'm thinking currencies, and maybe if it trickles down into the E-minis, the S&P and the Nasdaq tomorrow as well. So we'll keep our eyes open on that tomorrow, 2:45 and 8:30 Eastern time, gold and currencies. The big thing though here tomorrow is again, with news at 2:45, that'll apply to London tomorrow. PPI number at 8:30. Again, we're thinking inflation, we're thinking gold, we're thinking euro. There is that UK, the Brexit vote tomorrow, but I mean, they have diluted this so badly at this point now. I don't think you're going to see a lot of movement off of that. So keep your eyes open on that. But I would imagine the big news tomorrow morning is going to be that PPI number right at 8:30 Eastern time. So we'll be definitely looking at that as a front row seat in our trade room tomorrow morning. We open up tomorrow morning, 8 o'clock Eastern time. Look forward to seeing you there right along with us. Speaking of which, right, let's grab some charts. Let's get this party rolling here because we got a lot to cover here tonight. Starting off first here on oil. Most important thing right now on oil, you'll notice we have a trending environment. A range-bound environment, excuse me. I always start by asking myself, what type of market conditions are we dealing with today? Is it a range? Is it a trend? And we can definitely see the most important component on this chart right now on the oil is going to be this range, right? Market goes down into this trading range and of course goes up and ends up right back down into that trading range. Anytime I see a trading range, I always know I want to buy low, I want to sell high, I want to avoid that middle, right? So I want to buy that low, I want to sell that high, and at all, try our best here. Sometimes it's almost impossible, but we want to avoid the middle of that trading range. So what does the range tells me? It tells me buy low, sell high, avoid that middle. What else does it tell me to do here? It tells me to use those ranges to find range expansions. You'll notice take this range, I'm going to project it up. There's a range expansion 1, I'll project it up, range expansion 2. That creates major level of resistance. You can see beautiful test of that level of resistance up overhead. And then of course we got that range expansion down, range expansion down, and this becomes key support now underneath. So of course, again, we have a range bound market, want to buy low, want to sell high, and want to avoid that middle. Another key component here is this channel, right? Got that channel coming down here overhead, beautiful rotation, back and forth. This is a bear channel, so of course, anytime we get a bear channel, I always know I want to sell off the high of that channel. So the range tells me buy low, sell high, right? The channel tells me look to sell high here, right? So we should be seeing an opportunity to get this market now running back up to retest the high of that channel. I'd like to buy the low of this range, right? For a buyer, I'd like to buy the low of that trading range on its way back up to retest that high. So that's one opportunity I'm looking for right now on the oil. How would we do that, right? How would we buy off of this low? Because it's pretty obvious. This is a real strong run down, right? That's a pretty strong run down. Momentum is definitely bearish right now, as you can see referenced right on our technical clues on the left-hand side. We're definitely bearish, that's for sure. So how do I get in long in a bear market? I've got to let those sellers exhaust themselves. And to do that, I'm looking for what I call a nested two-try entry pattern. Now, what's a nested two-try? Well, a good example of a nested two-try would be happen back here. We see a strong move up. The trading range tells me I want to sell high, but instead of just trying to sell this market, I'll wait for them to try once, I'll wait for them to try twice, right? I call that a nested two-try rule, right? We got one, we've got two. That's a little bit too big there, Joe, right? Let's go back here. Let's go back. There you go. We got one, we got two, right? And then the price will collapse back down in. That's basically the same type of pattern that I'm looking for to go right back up again. We try to go lower here. I'm going to let them try once. I'm going to let them try twice and look for that buy now going back up into that trading range. Notice that trend line coming down too, right? I'd love to use that trend line for a nice, easy, nested one try, two try, and then try to grab that trade going back up into that range tomorrow morning. So that's the way that I want to play off of this low going back into the range here. Now, once we get back into the range overhead, right, now what do we do from there? Well, obviously, we have to wait a little more information. There might be a rising support trend line here. So imagine now we go higher with a two-legged pullback, right? Nice big move going higher now. Now we've got that rising support trend line, just like we have that falling resistance trend line here on the chart already. If we can get that rising support trend line, now I can play the same game, right, in the opposite side. I can still use that 1, that 2, and I can look for that trend line now to hold, right, for a sell going back down into that trading range. So just to recap here, guys, I got a trading range. I want to buy off the low. I want to sell off of that high. How do we do that? Looking for that 1 try, 2 try, but because that momentum is so strong going lower here, I'm looking for a nested 2 try, 1, 2, and I'd like to try to use that trend line going back up to retest the high. As we go higher here, I would expect to see another trend line coming in off of these highs, or sorry, off of these lows. Once we get that rally higher, I'm going to look for that same basic pattern to sell off of these highs back down into that trading range. Again, range tells me buy low, sell high. I want to use the top of that channel. And again, I'll look for that 1, I'll look for that 2, and we'll try to use that 2 try failure pattern right off of that trend line. Now, there are lots of different variations of that 2 try failure, but when it comes to ranges, it's all about buying low, selling high, avoiding that middle, and letting the opposite side of the market try twice. 1 try, 2 try, back up in. 1 try, 2 try, back down in. There definitely is a bit of a bear bias right now. There's no doubt about that. So it's going to be a little bit more important that we use a little bit patience going long, right? 1 and 2. Right, but as far as selling off the high, it's up 1, it's up 2, and we look for that sell coming back down right as we go. Now, talking about that 2 try rule right now, I want to keep going because we got the S&P, the Nasdaq, the gold, the euro to keep up with here tonight. If you want to see more details of the 2 try failures and really all of my favorite entry patterns, what I'll do is I'll put a free trading class in the upper right hand corner. I'll also drop a link right below the video tonight on our blog. You'll see a big red button right below the blog tonight on the video, right on the blog here at Sideways Markets. Grab that free class. It's free. It's a great education to all my favorite technical analysis. You'll learn all about what I call my 3-step trading strategy. And of course, you'll learn all about those favorite entry patterns, failures, strength, pullbacks, and of course, those trap patterns. Now, what does a breakout look like? Last but not least, we know how we want to trade back and forth inside of this range. We're using the 2 try, 1 try, 2 try, 1 try, 2 try, because the range. But what does a breakout look like, right? How would we successful break free of this range? What it takes is it takes a strong move outside the range. We call this a 1, 2, 3 breakout pattern. And the 1, 2, 3 breakout pattern, just like the name suggests, it's got a strong move against the range, right? Breaking out of the range. We wait for the pullback to the moving average, right? And then look for that strong move off the range, right? Off that moving average. So it's 1 is a breakout move. 2 is a pullback to the moving average. And of course, 3, right, is that jump off the moving average. Now remember, right, we saw the same thing back here, right? We saw a strong move up. We saw the pullback. We got 2 out of the 3. We just didn't see that strong move through, right? That strong move through is what we needed to get, right, for this market to break free. If we do get that breakout, if we do get a successful breakout of this range, what I'll do is I'm going to go looking for a hidden channel now. I'm not going to buy as the market goes higher here. What I'll do is I'll mark up, right? If we get that pullback and go higher, I'll mark up this new channel. I'll mark up the reversal line, and that creates the sweet spot right here. And look for that buy off the low of that new hidden channel. So the most important thing is if we see the market break out, We don't want to chase after it up here, right? Don't chase after it. Wait for it to pull back. If the market turns bullish, we break higher here. Make sure we wait for that pullback and look to buy that pullback off of that hidden channel. Again, you can learn all about 1, 2, 3 breakouts, all about hidden channels, all my favorite patterns. Grab that free trading class in the upper right-hand corner, and I'll see you inside the members section, and you'll learn more about all these favorite patterns. Let's keep going. Over to the S&P here right now. First things first, what type of day are we dealing with today on the S&P? It's a range, and anytime we have a trading range environment, right, trading range always takes precedence. Now, if I have a range, what's the plan? The range, of course, is to buy low, right? The range tells me to sell high, and most importantly, it tells me here to avoid that middle, right? Avoid that middle, fiddle with that middle. So, how can I buy the low of this range? Or even better, how can I buy low and how can I sell high, right? Because you can see here right now, one of the big components is that trading range, right? The second component here is going to be this channel, right? Kind of a hidden channel coming off of those lows. The third component here, trend line coming down. And of course, let's not forget about that gap, right? That's waiting to be filled. Now, first things first, trading range, right? Take that range. Is there a bias to it? There definitely is a bull bias into that trading range. Anytime I see a bull bias into a range, I always know I want to buy below the low of that range. I've got the bias being bullish. I take my trading range, I copy and paste it down, I copy and paste it down. That creates key support, which creates the battle zone. Now, once I have that trading range identified, let's mark up these highs. Bring it down to this low. Right? And that creates a hidden trend line, a hidden channel as I call it. And you can see that hidden channel really lines up nicely, right, with that hidden channel and that range expansion. Beautiful combination of multiple levels of support. So now we've got plenty of support waiting down that we can buy off of. Now all we need is to get the right setup. So I love trading with ranges because they make my job really easy. Anytime we see a trading range, we always know to try failure, right? That's the most common pattern. Now, of course, we got that trend line coming down, right? We talked about this a little bit on oil. As we go lower here, we create one, we create two. We call this a two-legged pullback, looking for that opposite side, right, to get hit so we can buy it as support. I call this a two-legged pullback pattern, and we'll try to use that trend line as a key level of support tomorrow, right? We may also, of course, end up back into this range and sit inside that range for a bit. So then what do we do? What if we sit inside that range? If we sit inside the range, we're still bullish. I still want to buy low, but now I'll look for the one try, the two try failure. Let those bears try once, let those bears try twice, and we'll look to buy this thing back up into that range once we see a nice strong signal coming off of it. Again, you can see I'm trying to use the combination, right, of these hidden levels of support, right? Would love to use the support at the range expansion along with the low of that channel. That'd be a beautiful opportunity to be a buyer here. So buying is relatively simple. Two-legged pullbacks, two try failures, and of course we got a big target waiting overhead, right, to fill that gap overhead, try to buy off those lows, and of course try to leave that runner up to that gap tomorrow morning. Now, with that said, how would we sell this? Let's just say we go up, right, and back to the high of this range now. How exactly do we plan on selling this market? That's a tough answer, right? Because obviously if we end up back into this range, if we end up back all the way up to the top of that channel, this is going to be one hell of a bull market, isn't it, right? And I don't want to just blindly sell this market just because it's at a level of resistance. If the market's at a level of resistance, just because we're at a resistance level doesn't mean I should start looking to sell this market. So what I'd like to do is look for a way to sell, but after I give the buyers a chance to really prove to me that they're not going to buy the pullback here. A lot of times what happens is we get these strong moves higher, right? And just because it's resistance, we try selling into it, and you know what's going to happen. Once it pulls back, the buyer is going to come in, they're going to buy it, and they're going to run you right out of town, right? They're going to run you out of that trade. So what I want to do is I want to let those buyers try once, let them try twice, right? I call this kind of absorbing the momentum, right? Let them try once, let them try twice, and then we'll look for that drop now coming back down into that range. Again, a lot of that will have to do with how the market sets up. For example, we may go in, we may have a trend line up here, right? And that trend line may end up becoming the best entry off of that trend line. So we'll play that by ear depending on what we see tomorrow, right, when the market is setting up. Most important thing right now for the S&P, we are dealing with a range-bound market. Range tells me buy low, 1 and 2, sell high, but that bull bias to it tells me nested to try to sell back into that range. Now, one more thing you want to remember, what does a breakout look like? Remember that 1, 2, 3 breakout, right? It's a 1, 2, 3 breakout, right? If we do see a strong breakout lower, or it's a 1, 2, 3 breakout. And again, if we do see that 1, that 2, and that 3, make sure it pulls back to your moving average. Then mark up that high, mark up that high, and now we have, of course, right, our bull channel, and we can look for that buy off the low of that bull channel, right? Again, got to see that real strong break higher though. 1, 2, 3. Break that range high, and then we can buy the pullback from there. Get that momentum confirming, right? Because right now, it's just getting drowned out by all of this chop around that trading range. One thing to keep in mind too, don't get too aggressive trying to get that gap fill, right? Gaps like this usually gaps like this get filled before Wednesday's closing bell. Not a guarantee to get filled tomorrow, right? Not a guarantee to get filled at all, really, right? We know statistically gaps do tend to get filled, and statistically they do tend to get filled by the end of the day on Wednesday, but there's definitely no timeline to it, right? We don't know when, we don't know how. So don't get too aggressive, right, on those gaps. So trying to buy nice and low right now on the S&P, that's the plan. Very similar here on the Nasdaq. Nasdaq is also very similar here. Nasdaq, of course, right, always start off asking that question, what type of day are we dealing with? What are our market conditions? It's a range, right? It's definitely a range. We end up going higher here with a bull bias into that trading range. And of course, anytime we have a bull bias into a trading range, it always tells me, right, buy low, right, buy low, and try to leave that runner back up for a nice big rally going higher. Now, of course, to buy low, I'm going to use that trading range itself. I'm going to copy and paste it down, copy and paste it down. That creates a level of support, right? Combine that support level with this hidden channel, and you can really see this whole area down here is really a great buy zone for the bulls. And then, of course, very similar we saw in the S&P, we get this trend line coming down overhead, right? We definitely have a two-legged pullback. I'm waiting to see if we can get that second leg and then look for that buy now going back up into that trading range. Now, also don't forget too, if we don't get that buy off that trend line here, if the market just runs back up into that range, we oftentimes get one shot here for like a spike and channel for a trap. So if we don't get that deep pullback, right? If we don't get that two-legged pullback off that trend line, right? Look for that little trap low here. One of my favorite setups when I don't want to buy high or when I don't want to chase after the market is I look for that trap below a prior swing. So again, the ideal scenario obviously is I want to try to use this as a 1, as a 2, right, and buying off of that trend line. But if I can't get that deep pullback here on the Nasdaq, the next best thing here is going to be, if it just runs higher here, is watch out for that trap setup, right? That trap right below that low. That will allow me now to buy nice and low. And again, trap patterns are really, really common during range-bound markets, because if we don't get that perfect 1, 2, and then back up, right? The next best thing is we don't want to chase after it as it goes higher. We want to buy low in a bull market, right? Anytime we get a bull market or we want to be a buyer, we want to buy as low as possible. And of course, being a buyer with a trap pattern, there's no better setup than a trap, right? To buy as low as possible. Now, at the same time here, you can definitely see there is pretty much neutral personality, right? Big move down, big move back up. So I think on the Nasdaq right now, you're probably going to have almost the same effectiveness whether you're buying or selling. So again, it's a range bound market. Yeah, I'd like to be buying first, 1 and 2, and then back up, right? But if we go back up into that trading range, don't forget, if we sit there inside that range, it's 1, it's 2, right? Use that 2 try failure pattern, 1 and 2, right? Back up. Or if we go right on through that range here now and up we go, again, because of this overall bullish momentum, I'm going to shift my focus. Instead of just your typical 1, 2 back up, we'll look for that nested 2 tries. We go back up here now, right? Let me zoom in a little bit closer here. If we go higher here now, what we're looking for is let those buyers try once, let them try twice, and then we'll try to sell back, right, back down into that trading range, 1 and of course 2. All right. Now, what would it look like? How would we know when we can start being a buyer here, go up to that gap, right? At what point would we see enough strength going higher to grab that gap fill, right? What would it look like? Well, the first thing we'd have to do is we'd probably have to see a strong 1, 2, 3, right? That would really be the foundation of that move. Then what I would do is I would grab that new high, find that new low, mark up that high, right? Of course, I'll look left, try to use those highs there as well. And then again, I don't want to chase after these moves. What I'll do is I'll look for that pullback, right? Get down in this sweet spot down here between the low of that channel and that prior support level, and look for that buy now, right, on that pullback. So it's a pretty simple pattern. The problem is you got to wait for that rally higher, and this is what most traders will make mistakes on, is they'll try to buy this pullback, right? That pullback's not going to be very reliable, right? Just because you see a strong move going higher doesn't mean that pullback's automatically now going to rally back up, right, and fill that gap up overhead. So the most important thing is let's wait for the 1, 2, 3, right? Let those buyers take control. Then we can go out. We can mark up all those prior resistance levels to use as support. And now we know where we want to be a buyer. I want to be buying off the low of that channel. And of course, that target up around that gap fill, just below that 66, right, 15 area overhead. So I want to buy the low, want to sell that high, and again, watch that 1, 2, 3 breakout. It could easily happen again to the downside, right? 1, 2, 3, big strong down, find new channel, right? Sell channel high, and go from there. Remember though, strength, strength, strength. That's the key component, right, to that 1, 2, 3 breakout. So once again, combining those ranges with those channels. And again, this time around, we talked about 2 try failures. We talked about trap patterns, hidden channels. If you want to learn all the details of all my favorite entry patterns, grab that free trading class in the upper right-hand corner, right? Or grab that big red button right below the video tonight on our blog. Join the free class. Everybody seems to love the free class. I'll send you hundreds of examples of real patterns that we find every day in our trade room. I think you're going to love it. Everybody loves the free class right now, so I think you'll love it as well. You can grab that link right below the video tonight. And then over on the gold here tonight, right? Gold is all coiled up. We're nice and chopped up here on the gold, right? We've got trend lines coming down. We got trend lines coming up. We got that trading range right in the middle. What type of data we have here on gold? It's a range, right? It's a range. And what does a range tell us to do? Range tells us to buy low. It tells us to sell high. And what was it? Yeah, avoid the middle, right? Stay away from that middle. Right? Stay away from that middle. We want to buy low. We want to sell high. And how do we do that? We use the 2 try rule, right? We use the 2 try rule. We let the market go up. We wait for a pullback. We let those buyers try again. Yep. And then we sell back down in, right? We go down. We let those bears try a second time and look to buy it, right, as we go back in. And you can see lots of variations of this, right? When I see a real strong break, right? When I see a strong break, I use the nested, right? Strong break up, 1, 2, back down in, right? Strong move down, let them try twice, right? And then back up in. And of course, we go, right? Smoking up, right? Nice big move up, 1, 2, and back down we go. Always looking to fade those breakouts, buying low, selling high, avoid the middle, two-try rule, right? Two-try rule. And again, I'm going over as much of the two-try that I can teach here in this short period of time we're together. If you want to get a great deep dive into that two-try failure pattern, just grab that free trading course, right? You'll definitely be happy that you did. Now, of course, most important thing right now, trading range tells me to buy low, tells me to sell high, avoid that middle. Hardest part right now, as you can see, is we are right in the middle of this trading range. Now, like I mentioned earlier, we get a bunch of inflation numbers tomorrow. CPI, right, in France. Was it France or Italy? I can't recall where it was tomorrow morning, 245. And then, of course, in the U.S. tomorrow, we get the 830 PPI number tomorrow morning, which is definitely going to be something to pay attention to on this gold. So if it does just kind of sit here right in the middle of that range, you know to stay away from it. Most important thing is there really isn't that combination of channels into ranges on this chart. There is a bit of a hidden channel here, but really the most important thing is it's a triangle, it's a range. I'm going to take that trading range, I'm going to copy and paste it down, create support. I'm going to copy and paste it up, create resistance, and you can just see how well these support and resistance levels off of this range is really holding right now. Again, trend lines will act as support and resistance as well. But again, most important thing here right now on gold is let's just get outside this range. One try, two try. Now, once we get that two try, right, we get that one, we get that two, don't forget about that hidden channel pullback pattern. We haven't talked about that yet today. A lot of patterns I teach in my advanced classes. They're all included in that free trading course. But assuming though we get that one, right, we get that two, yes, I can look for that buy now going back up as we go, right? That's my two-try failure pattern. But then from there, don't forget too, you can also take this pullback here as well, right? That pullback as the moving average comes over, right? This is that kind of what I call a hidden channel pullback. I'll mark up that high, I'll mark up that low, and I'll look to get that pullback off of that low, right? So it'll go like this. It'll be a one, it'll be a two, right, off the moving average, and then it's gonna be that failure, right? The failure breaks above that high. There's my failure, right? Then of course the failure gets us going. Don't chase that move higher though, right? Don't chase the move higher. Wait for it now to pull back, at least to that moving average. I like to go looking for that hidden channel off the highs, off that low, and I'll buy off of, right, I'll look to buy off of that low now, going back up, right, into that trading range. You can see a great example of that pattern back here. One try, two try, up, back, and go. That's the same exact pattern, right? There's your failure, there's your pullback. Same exact pattern. This is a little bit different, obviously. You'll never have two patterns exactly the same, right, but very, very similar there, right, from previous examples there on the gold. So again, I want to go down, right? One, two, look for that up, back, and go, right? That little two-try failure into that, right, hidden channel pullback. Same thing going higher. There really isn't much of a bias right now. You can call this a bull, a little bit bullish, a little bit bearish, right? It's kind of a mixture of both. Really plenty of options on both sides of it right now. Same thing up, right? One, two, look for that failure. And of course, that failure turns into a pullback. And then we go from there, right? So it's a one, it's a two. And then of course, that sets up for our two-try failure. That will come in on the moving average. And then we'll look for that moving average now. Bingo, right? And sell off of that high. There are lots of different ways we can use the two-try failure pattern. That's one of them, right? Maybe we go up with a two-legged pullback, one, two, and then back off of that trend line. We call those two-legged pullback setups. And then that covers us buying and selling, right? Stay out of the middle. That's the one thing about this. Stay away from that middle. What else we got here? What would a breakout look like, right? What would a breakout look like? A breakout, don't forget the 1, 2, 3 breakout, right? That 1, 2, 3 breakout, right? Not to be confused with the 1, 2, 3 reversal. They're pretty much the same thing. I'm having fun with you on this, right? But that 1, 2, 3 breakout, right? Good example back here. Look at how strong that move was. 1, 2, no, didn't get the breakout there. 1, 2, no, didn't get the breakout there. As you can see, just a strong breakout doesn't necessarily qualify a successful breakout. It's got to go 1, 2, and the 2 is the pullback to the moving average, and of course that 3 is that strong bust higher, right? And of course, drop that new channel, find that new high, right? Find that new channel and look to buy off of the low, right? This is a 1, 2, 3 reversal or 1, 2, 3 breakout into a hidden channel pullback. I don't chase trades. That's one of the most important factors of a successful trading career, is know what a good trade looks like and be disciplined and patient, right, to wait for it. So that's what we got to wait for if we want to take that breakout. If not, it's going to go up 1, 2, and then once we start seeing them struggle up here, that's exactly when we're looking for this party to come crashing back down right into that trading range, right? So buy low, sell high, avoid that middle. Gold's pretty easy. The hard part tomorrow will be stay away from the middle of that range. And then last but not least here, shall we dance? All right, let's do this, Euro. Euro is obviously, well, as we always say, right? What type of day are we dealing with today? What are the market conditions right now? Is it a range-bound market or a trending market? Well, this hell of a good time down here looks pretty range-bound to me. You can see that's a pretty nasty range there. Quite a bit of effort was needed to figure out what was the best fit for that range there. Most important thing right now, though, is it's a range-bound market. There's a bear bias to it. You'll notice how this market is bearish as we go in. The equity indexes, the Emini and the S&P, they were both bullish. Oil was a little bit more bullish. This is the only market out of all of these that really has a definite bear bias to it. And of course, with that bear bias, a range, what does a range tell me? It tells me buy low, sell high, avoid the middle. Because there is that bear bias to it, right? What I can do is I can use the standard 2 try, like this one, right? 1 try, 2 try, and then right back down in. You think I'm joking about this 2 try pattern, guys. Again, like I mentioned earlier, grab that information icon. There's that information icon in the upper right-hand corner. Grab that free trading class. Learn about these patterns, right? You're not going to read about these patterns in trading books, right? I keep this exclusively here on my YouTube channel. And of course, we trade this stuff every day in our trade room. So I want to combine, right? I want to combine, because we have a bear bias on this, I want to combine the top of this channel, right? We'd love to sell the top of that channel up top there. I'd love to combine the top of that channel along with our trading range. Range says sell high. I want to sell high. I'd love to incorporate the top, right, of that channel. How would we do that? Well, I got my level of resistance. Couple different options here we can use for selling off these highs. One would be a full 2 try, right? A major 2 try. 1, 2, and then back down in, right? Moving average comes over. And again, it'll look very similar to that, right? We go up, let them once, twice, and then once we see them fail, we start selling right into those stop losses of those sellers. And then again, don't forget, right? We can also look for this now as that hidden channel pullback, right? So if we do end up going higher, 1 and 2, now we know where stops are. We can sell right into those stops. And then, right, the moving average will come over. And of course, we can use that hidden channel and we can sell the pullback from there. So 2 easy options here for a major 2 try. And again, variations of this, we'll talk about that next, right? So 1 try, 2 try, and then back down into that trading range. What will be a variation of that? Well, a variation would be we see a strong move higher, but we don't get that major 2 try. It kind of hobbles its way lower, right? Kind of hobbles its way lower. So it goes, right, 1, 2, now the buyers are trying hard to keep it going. And then, of course, once we see them try twice, right, nice strong signal candle, and we'll dump the sucker back down into that trading range. Again, there are lots of variations of the 2 try failure pattern. They work great during range-bound markets. And again, because this market is a bear bias to it, I want to sell off that high. How would the market reverse, right? What would the buy side look like? The buy side here on the euro would be a 1, 2, 3. Again, you've got to successfully break free of this range. And more importantly, this would be kind of more of a 1, 2, 3 reversal more than it would be a 1, 2, 3 breakout. Same kind of thing though. 1, 2, 3. Got to pull back to that moving average to make it count as a 1, 2, 3 reversal. A lot of times these shallow pullbacks do not count for the 1, 2, 3. Once we know we got the reversal, mark up that high, mark up that new channel, and then you got it. Now we know when to buy the pullback, around that key level of support for that move going higher. Targets above us now, of course, are up at these prior swings. But really, I'll tell you right now, though, the euro loves to go from big round number to big round number, right? So look at 16,000. 16,000 is waiting just overhead. That'll be an easy target for us, right? If we can get this buy, or sorry, if we get the reversal, right? Now, what about a buy? That brings me to the final point here on the euro, and that is, how could we buy this market right now? Well, I mentioned earlier, right, I kind of gave it away here. The euro loves to move from one big round number to the next big round number, right? So, of course, we went from 16,000 up here, we chopped around, and can you guess where it was back here before? Yeah, it was right down around 15,000 again, right? So there it is at 15,000. So it's probably going to come back to 15,000. If we get the move going lower and we get down to that big round number there at 15,000, then what do we do? Well, we're bearish, right? So we can't exactly sell down there because we're too low to sell, right? So if we go pounding lower here, the only way I can successfully want to sell this market would be if it keeps going on a 1, 2, 3 breakout, right? It's 1, 2, 3 breakout. Then I can mark up that new channel and I can sell the high of that channel, right? Like we always talk about, right? In order to get a break out of that range, you've got to get a successful break out of that range. So I can't even think about selling down here until I can get a successful break out of that range. And to do that, we want to see that 1, 2, 3 breakout. Now, if we do get that move lower though, now is when you want to use that nested variation of that 2 tribe because momentum is bearish. So I'm not going to be too keen on a major 2 try. If we do get a major 2 try, that's great, but I'm still going to wait for that 1, 2, and then buy up from there, right? Let those bears try once, let those bears try twice. Really make sure you give those sellers a couple swings at this, and then when they swing and miss a second time at it, you know they're all going to bail on it, and this price will rocket back up into that trading range. Another key component would be, right, is we see a possible trend line here, right? So we get a 2-legged pullback here. 1, 2, and then it's 1, 2. Again, wait for those sellers. Wait for them to try once, twice during that pullback. That way, once they fail, right, we can start buying this thing right back up into that trading range. Like I said, the 2 try rule has so many different ways you can use it. Going with the trend, it's the major 2 try. Going counter trend or counter to momentum, right? It's the nested, right? And again, you can learn all about those details, right? Learn more about this in a much deeper dive and learn the whole 3-step strategy as part of that free trading class. Now remember, the goal tonight was to get these charts all prepped up because tomorrow morning we're opening up in just a couple hours, 8 o'clock Eastern time, and we're going to trade this strategy together, right, in our daily trading room. And of course, like we do every day, tomorrow morning we'll cover crude, S&P, Nasdaq, gold, and the euro. Before I let you guys go, I hope you love the new format here of our nightly newsletter. I promised you I was going to be spicing things up a little bit here this year, trying to get the video out a little bit earlier, right? Adding in my ugly mug, and of course you can see here, right, I got Noah building the ark behind me right now because it is raining cats and dogs out there. But it is great to be here with you guys. Hope you guys had a great weekend. Boy, what's great football on TV this weekend, wasn't it? A little bit of blowouts there, but man, oh man, you got to love this time of the year. Don't forget, tomorrow morning though, we'll be in our trade with all of our advanced members. If you're interested in coming out and executing this strategy with me and the rest of our advanced members, grab yourself a new membership to our advanced course. Don't forget, we get a great free trial to get you started. And as always, right, you can always pick up the phone, call that toll-free phone number, right? I'll pick up, answer all your questions. And don't forget, if you have any questions, you can always hit me up in the comment section below or use that live support tool right below the video tonight. As always, my name is Joseph. Be well out there. Be nice to each other, will you? And don't forget to be here next time. Adios, amigos. Bye-bye for now.